Hi everyone. Amazon reported fiscal year 2022 fourth quarter earnings results. This is one that I've been anticipating for a while now. I've been really curious at how Amazon handles the rising expenses and if it can make progress in that front. So let's get right into this Amazon earnings review and decipher the major figures from the report. Overall revenue increased by 9% in Q4 to 137.4 billion. That's impressive considering that consumers are not spending as much money online anymore. They're spending more on away from home experiences. Operating income decreased to 2.7 billion, down from 3.5 billion in the same quarter the prior year. This was to be expected. We were all expecting Amazon's operating income to decrease year over year, and the drop was a little bit bigger than I was anticipating or hoping for. And here's the big reason why. AWS, Amazon Web Services, its cloud segment, generated operating income of 5.2 billion, but the rest of the business generated an operating loss over 2.4 billion. So everything outside of AWS is not profitable for Amazon. And this is despite the fact that it generates over 137 billion dollars in sales. And so it's been something that I've been looking at over the last several years that I've been covering Amazon for a long time now. And I'm always worried about how it's going to generate profits in its e-commerce business. How can it make money selling low-priced items and offering fast and free shipping to your home? Like how can it ever make profits on that? And if it ever does, that's going to be very very thin operate profit margins, right? You're buying something for $5 as an Amazon Prime member, and Amazon ships it to your house for free to your door within a couple of days. How is that going to be profitable? And so that's what I'm worried about. That's what I want to see progress on. And I haven't been seeing any progress on that front. Briefly, during the height of the pandemic when sales really exploded, it was turning a profit in these segments, in these online sales segments. But that was very brief and it didn't last very long. And so I don't know. I'm a little bit concerned here for Amazon. Um, and on top of that, to make matters worse, the AWS segment is experiencing slowing growth and falling profit margins. The profit margin in this segment fell considerably year over year, and competition is rising. Alphabet is ramping up its cloud services. Microsoft is ramping up its cloud services, and they're no longer letting Amazon take the the big portion of this market anymore. So concerning so far. Moving on, its fourth quarter earnings per share included a pre-tax valuation loss of $2.3 billion from its common stock investment in Rivian Automotive. If you weren't aware, Amazon holds an equity investment stake in Rivian Automotive and has made an order with Rivian for about 100,000 electric delivery vans. And so they're kind of in a partnership there. But the stock valuation for Rivian collapsed, and since Amazon holds a large amount of shares, it had to record a loss because of that. Free cash flow worsened to an outflow of 11.6 billion in the trailing 12 months. This was worse than an outflow of 9.1 billion in the previous quarter. So the trailing 12-month losses in free cash flow are increasing. So it's heading in the wrong direction in terms of free cash flow. Thankfully, we finally see some evidence of employee decline. Amazon had 1.541 million employees as of the end of its most recent quarter. This was down 4% year over year, but it was only down 3,000 from the previous quarter. So Amazon announced that it was going to lay off about 18,000 employees. I don't think these are reflected yet in these results, but in my opinion, they really need to let go of some of these workers. They may not need to fire workers, but just kind of don't hire anymore and let the ones that are quitting and switching jobs, don't replace those workers so you can bring down these figures. You've got way too many employees here, and yes, I know that helps you offer faster shipping, but you know what? It might be okay to have, a little bit slower shipping and not spend so much money to, improve the shipping time by half a day or so. The guidance from management was for 6% revenue growth in the next quarter and operating income of 2 billion at the midpoint, which would be down from 3.7 billion in the prior year's comparable quarter. So a big fall off in terms of operating income expected in the next quarter. Not a good sign. Again, expenses and cash outflow are really getting out of control here for Amazon. I was hoping to see better progress in terms of reduction in employee count, seeing just 3,000 lower from the previous quarter. I was a little disappointed in that. I was also disappointed to see the slowing growth and falling margins in the AWS segment, since that's the segment that's really carrying the load for Amazon. I don't know how much longer AWS can continue carrying the load here. So, longer term, I still feel the company has excellent prospects. We're going to keep spending more money online compared to in person as a percentage for several years. It's just in the near term, I'd like Amazon to get their costs under better control. All right, so that's all I've got for this video. Thank you for watching. I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.